to the channel. Today's date is December 17th. And what we're going to be talking about is patience is when we're in a bubble. Let's get straight into it. As always, we like to talk a little bit about what the market is doing today. Dow Jones down $280, NASDAQ down 73. This really doesn't mean anything. We know we've been in a roaring market. The market has just been completely blown. But I will tell you something that is interesting is the 10-year yield. It moved all the way down to like 4.12. And now I believe it was the CPI or PPI report. Since then, last Thursday, we've been moving up and we're back up to 4.38. Even though the Fed is supposed to cut rates tomorrow, I think a lot of investors think because that PPI or CPI report was kind of hot, they think the Fed may be limited on how much they'd be able to cut. So that is interesting. So what we're going to be talking about today is the patience that you have during the bubble. I have to tell you that I believe that this is probably, at this point, the biggest bubble I've ever seen in my life. I lived through the 2008 bubble. I lived through the 2000 bubble. During the 2000 bubble, I was still a kind of young investor. I was enthusiastic. I was kind of hyped up about what was going on. And because I really didn't know what I was doing, as I said, I was just kind of starting investing. I got dealt with. I lost some money in that bubble. I got caught up in the internet crave. And I'd already started reading Ben Graham and reading about Warren Buffett. And I didn't question what they was doing, but as I said, I was learning. But that was a really good learning lesson that set me up for the rest of my investment career. Now, 2008, 2009, I knew there was a housing bubble. I just didn't know what all the derivatives and stuff like that being traded. I didn't think that it would go or affect the stock market to the extreme that it did, where banks would be going out of business. So those were the two bubbles. Like I said, 2000, as I look back on it, it was a lot more noticeable. It was a lot more just enthusiasm. It was a lot more people selling a lot of garbage, as I believe we're doing today. I believe that we're just in a big bubble. I believe speculation is at its highest that I've ever seen it. People buying things that really don't do anything. Nvidia is up a lot. All the big tech stocks where they're real, but their PEs is too high. And what happens and when you're in a bubble, normally everything corrects itself. So you gotta be very, very patient. Like I see some stocks out there I want to buy. I think that UPS is very, very low. I'm not sure what's going to go on with CVS, but it is particularly cheap. I don't want to buy into them because once the bubble bursts, everything go down. That's why the patience and what is the title of this episode is patience. And so one of the things that Ben Graham talks about is when you're in times like this, and I haven't been investing now for about 2 months. I only hold a couple stocks. I sold almost all my stocks because I wanted to make sure that I was ready for when the downturn comes. Because I'm gonna tell you, it's a lot easier and more money being made when you have a downturn. So in October of 2022, the market had just drifted down about 25%. We went all in. I went all in because the market, and I believe it was because interest rates had went up. Things like Meta, Google, and all of them that came down significantly. Meta came from like 350 to like 90. So there was a lot of stocks that was really cheap. And then from 2022 of October 2022 to about October of this year, and I sold before the presidential election, and it's painful to watch these stocks just keep going up. But I got to remember, I got to watch the patience. There is a saying out there that I really don't like that much. They say that you're never wrong taking profits. I think a lot of times you can be wrong taking profits. And in this case, so from 2022 to 2020, about October of 2024, I probably was up 100%. And I say I don't like that. It's never a bad thing to take profits. As I say, I do think it could be a bad time to take profits. Sometimes there's good stocks that you probably shouldn't sell, or good companies that you probably shouldn't sell, that you can hold for the long term. It's just examples that, like we're in right now, when we're in a massive bubble, one of the biggest bubbles that I've ever seen. And bubbles never end, they always end badly. I remember in 1996, Alan Greenspan, Irrational Exuberance, he said that in 1996, the stocks kept running until 2000 and kept getting more and more overvalued. So, but then when the bubble did burst, the Nasdaq was down 75%. So that goes. So I don't like, you know, taking money, taking profits is never a bad thing. As I say, it could be a bad thing. But talking about the run up from 96 to 2000, we'll use Ben Graham's quote of when you're going into the market to hope to make $1, sometime you can lose two. What does that mean? As I say, I'm having a hard time with this, market keep going up. But I understand that you got to have patience, and I know that this is going to end badly. So I can't tempt myself. So am doing other things to stay active. I'm buying bonds. I'm selling some deep out of the money calls, against stocks that I think is overvalued to keep making money during this time, and to keep, I'm hoping, to make 6, 7, 8% without even really being invested in stocks by doing these unorthodox things, even though buying T-bills is not unorthodox. But I want those T-bills to keep making money. It done came all the way down to like 4.3%, something like that. So they're nowhere near as profitable as they were when it was about 5.25%. But I would have to be, if we stay in the current state that we're in now, I would have to be willing to accept 1%. Because when, as Graham said, me trying to jump back into the market, or let's say me trying to buy Nvidia now, even though it's in correction territory, is down over 10%, I still believe Nvidia is overvalued. So if I start second guessing myself, or maybe I can get into Nvidia and ride it from 129 to 150 to try to make that extra dollar. But what happens when the storm do come and Nvidia be down to 60? And I don't want to ride Nvidia from 129 to 60. The risk is just too great for me to have to accept that. So I want to make sure that I keep myself in a really good position to make sure that when the time to come and the bubble do burst, and sometime, let's say from 2000, it took all the way about to 2001, sometime deep in 2001, for the market to hit a bottom. Even in the stock market started to correct itself in like 2007. It took all the way to March of 2009 for the market to bottom out. I don't believe that I'm going to be able to find the bottom, or I'm going to be able to hit the bottom, because you can never know. Just like, I heard a really good saying the last a couple days ago, is that if you're willing to buy in a completely undervalued market, it has to be in reverse. When you're in a completely overvalued market, you have to be willing to sell. I mean, you have to be, each one, they kind of go there. You couldn't do one without doing the other. And right now we're in a completely overvalued market. And so it may take, and if I had to guess how the bubble may start, something is going to happen to start the stock market to start going down. And normally when the stock market going down, and the Federal Reserve is going to probably run to the rescue, start lowering interest rates significantly. But then what normally happens, as something pops and something starts going down, Buffett has another saying, who's swimming naked when the tides come in. So there's other things start to happen once you start going down. I mean, we automatically know that people are going to be, they're on margin. They're going to have margin calls. We're probably going to have companies going bankrupt, and this just all fuel the downturn. And what I try to do is I just try to wait till I can get really, really good companies that are completely undervalued, basically the opposite of where we're at now. So I have a list of the favorite companies that I like. And just to name a few, I love Meta, I love BlackRock, I love Amazon. And if I can get a 50% 60% correction in these stocks. And I think I can get that because I believe these stocks are really overvalued. And it's so I'm saying that I made significant amount of money from 2022 October 2022 to October 2024. And I just told myself I'm not giving that money back. I'm willing to make a lesser return, even though I believe you can go all T-bills and over the next year, I believe you're going to outperform the market. I mean, I got pretty much almost a guaranteed 4% as to this, when I believe that the market in the next year and a half could be down, 30, 40, even 50%. And you can make a significant a lot more money when you can buy stocks at really good prices and the overall market is cheap. Even if you're not an individual investor, I would strongly recommend going in something like the QQQ. And I don't believe the QQQ is going to have a correction that we had in 2000 where it corrected 75%, because the majority of the companies pushing the QQQ up, is like Meta, is like Tesla, is like Microsoft, is like Apple. Those are real companies that I believe that's going to continuously keep making money. It's just right now they're overpriced. So I'm waiting patiently on the sideline with the amount of money I have. I just wonder, how much patience Warren Buffett has, that's been doing this for a very long time, how much patience he has. And I'm actually kind of proud of myself. In 1969, Warren Buffett, basically he closed down his partnership because he said that the market was basically overvalued and he really didn't have anything to invest in based on what was going on in the market. And that's where I'm at today. I have nothing that I want to invest in. But and so I can wait patiently. I can still make money, just not looking for things that that's going to blow. I'm not going to take a risk, as Graham said, to try to make $1 and possibly lose two, probably lose two, not even possibly, probably lose two. I don't want to do that. So the key word is patience. So I gotta have patience for this bubble to burst, and all bubbles burst. So if this information was helpful, please subscribe, please like, please forward, and good luck investing. We out.